Hi, and welcome to the second episode of Equitymaster's Stock Market Wrap-Up. I am Rini Mehta, and in today's podcast, I'll be taking you through what moved the markets over the week. So let's jump right in. Sliding Chinese yuan hits world stock markets and stokes trade war fears. IT stocks gain on weakening rupee. An update on upcoming IPOs and the final day of TCNS Clothing IPO. Government announces 113.4 billion rupees capital infusion in 5 public sector banks. Speaking of the broader markets first, after trading greater part of the day in the green, Indian share markets managed to hold gains and ended the week higher. At the closing bell, the Sensex ended up by 145 points while the NSE Nifty was up 53 points. Today's gains were largely led by buying in the mid-cap space, and on the sectoral front, IT and pharma stocks boosted the up move. Globally, worries about a full-blown trade war are likely to persist as officials from the EU Trade Commission are said to be preparing a list of retaliatory measures in response to proposed US tariffs on European Union cars. With the markets out of the way, let's look at the key stories in the week gone by. The Chinese yuan slid to its lowest in more than a year today, further undermining global sentiment and stoking worries that Beijing's currency management could be the next flashpoint in a trade dispute with the United States. The yuan slid as low as 6.8 to the dollar after the central bank set a weaker fixing for the currency for the 7th straight session. This also forced a volatile session in Asian stocks. The drop in the yuan came a day after US President Donald Trump said he was concerned that the Chinese currency was dropping like a rock and the strong US dollar puts them at a disadvantage. His comments knocked the dollar, forcing it off one-year highs against a basket of currencies. But the yuan, hurt by the concerns over the China-US trade war and a slowing Chinese economy, has shed 7.6% of its value against the dollar since the end of first quarter of this year. Back home, IT stocks rallied 2 to 5% in trade today, tracking weakness in the local currency against the US dollar, which hit a fresh record low of 69 rupees in the morning trade. This comes as foreign funds continue to stream out of emerging markets on expectations of higher US interest rates and on the back of weakness in the Chinese yuan. A weaker rupee could translate into higher returns from the US market, the biggest source of revenue for technology companies. PSU banks were in focus today as the government announced an infusion of over 113 billion rupees in 5 public sector banks as a part of its Indradhanush scheme. This is the last tranche of infusion under the scheme. The 5 banks are Punjab National Bank, Indian Overseas Bank, Andhra Bank, Corporation Bank and Allahabad Bank. Note that the government had announced a Rs 2.1 trillion recapitalization plan in October last year. The 2-year recapitalization program was aimed at helping state-run banks to deal with rising bad debts and spur credit growth. After the euphoria of recapitalization, bad loans have come to haunt them. Post the Gitanjali Gems fiasco, PSBs are yet to fully recover from its impact. As it turns out, PSBs have had a difficult year, to put it mildly. Moving on to the IPO space, the IPO of women's apparel maker TCNS Clothing Company was subscribed by around 2.1 times on the third day of the bidding process. The IPO received bids for over 23 million shares against the total issue size of around 11 million shares. Meanwhile, HDFC AMC, the country's second largest mutual fund firm, is set to open for public subscription from 25th to 27th of July. The IPO is estimated to garner 28 billion rupees. HDFC AMC operates as a joint venture between HDFC and Standard Life Investments. Interestingly, the IPO market is gearing up for a burst of activity, with at least 12 companies planning to raise more than rupees 170 billion over the next 2 months, after a quiet start to the June quarter. As per the reports, the pipeline in the June quarter will be very healthy. With so many new IPOs hitting the market, I understand it would be difficult to not get carried away. But it is imperative to be critically selective when investing in IPOs. You need to carefully analyze each company for its own merits and don't give in to hype surrounding the public offering. That's Ankit Shah's approach at Equitymaster Insider. He keeps a sharp eye on developments in the IPO space and keeps his readers up to date on the big ticket IPOs. Just log on to equitymasterinsider.com to grab the opportunity. Well, that's all from us today. Before signing off, we would like to know whether you like the idea of podcasts. Is there anything specific that you would want us to cover? We would love your feedback. Just visit equitymaster.com and drop us a line. We look forward to hearing from you. Thank you and happy investing.